Morning, Market Chameleons. How you doing, Dima?
Good morning, Will. How are you?
Good. We have a brand new user to the Chameleon today, so I let him know. Listen, check out the videos. There are hundreds and hundreds of videos, and we actually on the website we have a video library. I put that link in. That's always a good place to start, as is the morning show this morning. I'm sure there's some great stuff we're going to talk about this morning. D, you want to start with the disclaimer?
Yep. Good morning, everybody, and welcome. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, contact your broker. That's what they're there for, to help answer your questions, provide you with guidance. With that, there's the disclaimer.
Awesome. Now, before we get started, D, we're playing Where is This Chameleon From? My background today is another city around the world. Send me an email if you know which city it is and which chameleon lives in this city. It's a beautiful skyline, isn't it, D?
Awesome. Yeah. Let me take a. Actually, I was trying to bring up my.
Oh, no worries.
I think I know the answer, but I don't want to say it.
Don't you dare give it out.
Okay.
All right, let's get started, everybody. What are you seeing, Dima?
All right. I'm going to share my screen real quick. We'll get started with the pre-market report. I think we'll go take a look at what's coming up in the earnings front, answer any questions that are popping up in that chat. And if we have time, maybe we'll go over some trade ideas from the homepage. So these are stocks that are trading in the pre-market hours before the market opens. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. I'm going to really quickly scan for stocks with a market cap of 20 billion or higher. And let's take a look what we have here. Really quickly, I see 29 that made the percentage gainers list, 5 on a percentage decliners list. So from market breadth, it looks like more favored towards the bullish side than the bearish side. Boeing up there, up 6.3% in the pre-market. Well, you said there's some news on it. They're starting.
Yeah, it's a 737 MAX. I think the FAA is going to give it approval to fly again.
Okay, so that's good, and it's come a long way, right? Where was Boeing like down to like $100 or something like that, even below. So,
yeah, well, there are also other problems, right? It's not just the 730. It's, are people going to fly again? Are they going to need to order new planes? You know, there are all sorts of things. Some serious tailwinds or headwinds.
Right.
Excuse me.
While we're on here, there are two things I wanted to mention. One of them is General Electric here. That's up 2.9% in the pre-market hours. And we talked about it for a couple of days. There's a large concentration of open interest on that 10 strike. Let me show you that, and I think I even did a post on that yesterday, but let's take a look at that real quick. I'm going to open up a new tab for Market Chameleon, and I'm going to go here, look up GE. And this has been there for quite a while. So here I'm on General Electric. I'm going to go here to the activity here, and this is kind of like a summary of the activity in the options. And here we have an open interest tab. See here, and this gives us a breakdown of the open interest by expiration month. So over here we see by expiration month, and here January 15th, 2021, we see 1.8 million options with open interest just in that, just in this expiration, which is a little bit unusual because you see most of the time the biggest concentration are in those front months, right? The very near term months usually has the biggest open interest. This one, 1.8 million just in the January 15th, 2021. If you click on it, it'll give you a breakdown by strike. So I'm going to click on this this open interest right here on 1.847, and it gives us charts below. The first chart up here, this is for the calls. The chart below that is for the puts, and and these bars represent the open interest as a percentage of average daily stock volume. So what this is doing is giving us a relative perspective, what the open interest means relative to what the stock trades on average. So like, for example, if on average the stock trades 100 million shares per day, and you had enough open interest that if it crosses the strike and exercises, that would be equivalent to 100 million shares. So that would be like 1 times its average daily volume. So imagine like if it trades 100 million per day, you add more to it. If it crosses the strike, that kind of just accelerates it, right? So we're looking at a big concentration of open interest. So here, this is the 10 strike over here, and that represents 35.7% of the average daily stock volume. So we see here GE trades almost 100 million shares per day, and if the stock crosses 10, at expiration, all these options go to parity. It's like 100 shares per option. That's like 35 million shares. So I'm hovering over there. That's what it's showing. And that's been there for a while. Anyway, for GE, that is a big concentration of options. So it's interesting to see, that big accumulation on that 10 strike. And that's been there since GE was way below, like maybe even at like $8, $7. So it keeps creeping closer and closer to it. And I think today, we're right at that strike. Here.
We're getting Jake is asking, is this a new feature?
No, this has been there the whole time. It's just that I don't get to go over every feature every day. So sometimes I just kind of try to show something new.
So for anyone who doesn't know, I mean, Jake, I refer to him as the doctor because he knows almost as much as Dimitri about the operation of this site. It's amazing how there are so many features on the Market Chameleon, and even some days Jake learns something new, which is awesome.
Yeah. So definitely this, it's been, since I seen it pop up, I just seen kind of like a slow kind of turtle push towards that strike. We'll see what happens if it breaks through. But for GE, obviously they're having issues, right? They had a big debt that they needed to take care of. I think they've been selling assets, trying to work that debt down. They've had issues, but here's GE now, $9.98. Look at that 52-week range, $5.48, $13.26. So it's coming off. I'm going to take a look at that chart.
Yeah, well, there was talk, and I know the way the bonds were trading that, GE may not make it at some points. So
yeah. I mean, I think Warren Buffett used to own GE, got out of it like years back, right? Like when it was like in the 20s. I think that GE actually, they took him out of the Dow Jones, S&P 500, I forget, but they took them out of there. But here it's starting to creep. Let me just do versus 20-day average. So see, we're up above the 20-day average. Let's see, 50-day average. So, right now we're sitting above, all those averages. So we'll see, but we're right at that strike price. And it was some big trades, it wasn't like all one. I saw some big block trades trading on that line. Anyway, that's GE. I'm going to come back to it. I'm going to come back to the pre-market. Another one I wanted to mention, we're looking at the XLE we've been talking about for a couple of days, the energy sector. Here,
I think the energy sector over the last 5 days has outperformed the Dow and SPY.
Yeah, and that's one way to play the recovery, right? The coronavirus recovery. And let me show you what's going on. So the idea there is if the vaccines, if they're working, they're rolling it out, the economy eventually will start opening up. So you're going to see all these companies that have been shut down, like, travel, vacationing, transportation, those should start doing better, right? And that energy sector, it's already been doing bad. And this was like the, how do you call it, the nail in the coffin, where they really got smoked. Now we're seeing that recovery. And I think that they stand to do pretty good, and you're diversified, right? So it doesn't matter if, you know, you don't have to pick in a specific, you know, sector of the economy, like, you know, cruise lines or airlines, because the energy sector, they service all those. I'm going to show you kind of, let's take a look at the snapshot from yesterday. So this is on the options. I'm looking at snapshot, and here we go. And these are all the sector ETFs in the S&P 500. So this is SPY, S&P 500. These here are ETFs, but broken down by the sectors within the S&P 500, right? So here's the energy. We see yesterday it was up 1%. Look at 2 weeks. In the 2 weeks, it's the best performing sector since they started announcing these vaccines, up 23.5%, right? Compared to SPY 7.3. And you see the next highest one is the financials, 11%. But look how far they came down in the last year. They're still off 39%. And just to give you an idea, and I wanted to talk actually about these implied vol ranks, because things are coming, they're really coming in now. These premiums, you know, we're like in the subdued area now. But let me come back to that and show you the XLE. So a lot of people play, you know, the vaccines, the coronavirus vaccines. And we've seen this in the pre-market reports where some, you know, biotech stock announces we have a vaccine, you know, a coronavirus vaccine. You see really big pops, right? We've been seeing that for like months. And let me show you, here's Pfizer, you know, they announced it. So they did, you know, let's take a look in the last 3 months. So you see how choppy it is. So it's really hard, even with the vaccine, right? With a 90% effective rate, this is what it looks like. But let's compare that to the XLE. Here's a 6-month chart. So very, very choppy. So it's hard to win even with the vaccine. I think they even announced today, right, that they reached another milestone in the safety. But instead of the Pfizer, take a look at the XLE, you know, starting now to cross the other way as this good news is coming out, right? There's a 3-month chart. As this news is starting to come out, that's how. And look at the last month. So the last month is really where we started seeing this is where around they started talking about that the vaccine is 90% effective. So you see here the spread, 20% in XLE versus Pfizer, down 5%. So I guess the point is trying to jump on the coronavirus. There's different ways to play it, right? It's very hard to pick which biotech stock is going to be the clear winner. But whatever biotech stock is the clear winner, there's other sectors in there that might be even bigger winners once this thing comes out. Does that make sense?
Yeah, well, it's also, I mean, and there's a nice conversation going in the chat. I mean, is this market already pricing in that the vaccine is 95% effective and that everyone's going to take it? I mean, there's so many things, so many variables in the next, you know, year that could, you know, they could launch a vaccine, but who's running out and taking it? You know, I talk to a lot of people and I say it's a coin flip. You know, a lot of people are like, I'm not taking the vaccine for years. So the vaccine doesn't work unless, you know, you work towards a herd immunity, right? So it's going to be interesting. I know in Pennsylvania, you know, they're doing things that are making people not come to Pennsylvania. And, you know, it's I mean, I know in Philadelphia, they locked you guys down again, didn't they?
Yeah, Philadelphia, we're going back into lockdown. I think is it across state or just Philadelphia? But
I think Philadelphia for the lockdown, but the state, you have to report. If you come in from out of state, you have to take a test.
Right.
Report. I mean, it's like a little.
Well, as of this Friday, there's not going to be any more in indoor dining. I think they might be closing the gyms again, maybe the bars, so we are going back into lockdown. Now, I think that I'm not sure if this is true, but I'm hearing rumors that they want even you to wear a mask while you're at home, with your family, which I don't know how they're going to, enforce that or monitor that, but that's right now, those are the things that I hear people talking about. Anyway, if we do see, I think though in Russia, they may even have already a vaccine that they're giving to people. They might already start, administering some vaccines in some places.
Yeah, well, we just did a quick poll, and I'll ask you, D, are you going to take a vaccine when it's available?
I was thinking about, I'm not sure. I'm maybe.
So
I usually,
I'm not going to use an option pun, but you're straddling the fence. Is that correct?
Yeah, maybe. I'm not sure. The thing that I'm worried about really is not because I know I've seen people who had coronavirus and they had like, some had like a fever or cough and they got over. What I'm worried about is like once it gets into your lungs, that's a little bit scary. People stop breathing, you can't breathe.
Again, this is not a treatment. This is a vaccine, right? It's just and by the way, we only have a small number of people who participate. Well, actually it's growing. Right now there's one idiot has said they'll take it right away. And that's
that was you.
Everyone else said no. I know this is a small poll of chameleons, but
yeah.
It's,
well, I'll tell you what, Will's wife is in the industry, so she's seen people get sick from other things, and she's a big advocate of vaccines, right? Well,
yep.
Like your wife.
Well, she ran vaccine trials for years. Don't hold that against me, but she's a big proponent of vaccines. So.
Yeah. I would say Will and I are risk averse, so we might be taking that vaccine.
Mike,
the other side.
Will's wife will drag him to the clinic.
Yeah.
So we have one other chameleon says yes, but of the 20 people who voted, only 2 have said they would go and get the vaccine.
Yeah.
So I mean, you drag that across America, right? It doesn't rate to slow the pandemic.
Right. Yeah. You need people taking it for it to work across the board. You need people taking the vaccine. I agree. Well, look, the market is pricing in at least that good news, right? That we'll be able to somehow.
Yeah, I think they're pricing in that it's going to happen, like that everyone's going to take it, and that we're going to slow this bad boy down. But
yeah. All right, so there you go. That's the energy sector. Let me take a look, and then we did GE. Let's go because we're running a little bit out of time. Let's take a look at the upcoming earnings. Unless you have questions, any specific questions, just let me know. Will I'll look at those. So now I'm on the upcoming earnings. These are earnings over here coming up in the next 2 weeks. This is the report. I'm going to filter it by stocks that on average trade 5,000 option contracts per day or more. Let's take a look. Well, we have these already reported before market open. So this is today after the market close. Nvidia, they're expected to report earnings as of yesterday's close. That straddle went out at implying a move of 6.5% in either direction, up or down. That's the straddle, buying the call, buying the put at the money. That compares to a 4-quarter average move of 3.1%. So that's the average of the absolute move in either direction in the last 4 quarters, and a 12-quarter average move of 5.1%. So we see that implied move right now. It's 3.4% above that 4-quarter average, 1.4% above the 12-quarter average, and the high move on Nvidia in the last 12 quarters was 18.8%. Let's see, that's what's a Macy's? That's tomorrow before the market opens. Right now, that's implying a move of 10.9% in either direction. That compares to a 4-quarter average move of 3.2% and a 12-quarter historical average move of 6.4%. So that's 7.7% above that 4-quarter average, 4.6% above the 12-quarter average, and the high move on that stock is 15.9% in the last 12 quarters, which, let me see, CSIQ, that's the solar company. I think we talked about that one yesterday as well, but that's tomorrow before the market opens. The implied move according to the straddle, implied move is 9.4% in either direction. That compares to a 4-quarter average move of 10.5% and a 12-quarter average move of 9.8%. So we're a little bit below that 4-quarter average, 1.1%, 0.4% below the 12-quarter average. The high move on that is 18.4% in the last 12 quarters. So those are the ones in the next day. What's LB? That sounds familiar. L Brands, apparel store. Let's take a look at that one. So that right now implying a move, and that's expected to report today after the market close. That's implying a move of 10.5% compared to a 4-quarter average move of 8.4% and a 12-quarter average move of 8.9%. So we're 2.1% above the 4-quarter average, 1.6% above the 12-quarter average. The high move on that stock is 18.2% in the last 12 quarters. So that's looking at the earnings. I don't see a lot of them in the next 2 days, and these are going out further. So we'll get to those, as we get closer to the earnings date. Well, do you have any questions?
Yeah, well, we had a question from Brad, and there's been so much vaccine commentary, I kind of lost it.
Okay.
He asked, can you take us through one of your personal, now I know, we don't give any advice on personal trades or
right.
What we try to show is what the Chameleon, the data is showing. So maybe you could walk Brad through, you just mentioned Nvidia, Macy's, maybe even take a look back at Target's earnings, see if there are any options strategy alerts detected or anything of interest that he could walk through some different trade ideas, see if anything works for him to think about and start looking at.
All right. I mean, I guess since we're on here, let's take a look at Nvidia. So I'm going to go to Nvidia. That's coming out. When did I say? Today after the market close? Right. So today after the market close, let's take a look at the earnings history here. And over here, we have a visual of the predicted moves, which are these bars that are going up and down. So you see we start at 0 and the bar going up and down, that's the straddle, the predicted move in either direction, up or down, right? That's the cost of the straddle. If you bought the call, bought the put, that's the percentage move. It has to move beyond for you to make money. If you're long the straddle, if you're short the straddle, you need to move within this bar. So here I'm going to hover over here. This is on February 13th after the market closed. Nvidia reported earnings. You could see that the actual move, the stock was up 7% that day. The implied move was 6.2% in either direction prior to the earnings move. So you see it was up a little bit above what the straddle was predicting. So if you were short that straddle, you would have had to buy it back for more. You would have lost. If you're long that straddle, it would have made money. So this red bar, that's to the downside. Hovering over November 15th, 2018, Nvidia reported earnings after the market closed. The next day, the stock was down 18.8%. That compares to the implied move of 9.3% in either direction. So if you're long that straddle, it would have made money. If you're short, you would have lost because it broke right through the cost of that straddle. So looking at the historical averages, we see that Nvidia options overestimated the move 83% of the time. So you could see it did break out a couple times, but most of the time that move was more muted than the predicted move. So 83% of the time, that straddle was overestimating the move. On average, heading into earnings, the average of the implied moves was 7% up or down compared to the actual realized moves of 5.1%. So there's a 1.9% differential on average between the implied move and the realized move. Remember, we're trading the averages, right? The long-term averages. So here's what the long straddle did. It was a winner 17% of the time, right? If you were long to straddle, it was profitable 17% of the time. The rest of the time it was unprofitable for an average return of negative 28%. Long strangle, that was only profitable 8% of the time for an average loss of 61%. And these are how the credit iron butterfly did and credit iron condor. Let's take a look at the implied volatility. So this is looking at the implied volatility crush, and we're going out 30 days to maturity. So not the near-term option, which would be the straddle that you're trading for the move. The longer dated options, they have bigger vega. This is looking at how the implied volatility did post earnings. So this is what happened day after earnings. On average, the implied volatility was down 23%. Day before earnings, on average, the implied volatility was 50.1, which is kind of like where we are now. Remember, this is 30-day, an option of 30 days to maturity. The day after reporting earnings, the implied volatility dropped to 38.6. 5 days later, the implied volatility was 38.7. So right around where it was the next day, just kept stable. And here you could see that these are the observations. So we're right here. The high 66, low 40.8 day before earnings. We're right here, 50.1. This is the average next day, right? So if it opens closer to this tomorrow, you have kind of your benchmarks to look at in the morning. Where's the implied volatility, and where do you think it's going to come down to? It might open right at this, but if not, a lot of people, it depends how fast people are selling options, right? Or what happens after the announcement. But if there's not much to the announcement, if the move is muted and people aren't selling their options as fast in the morning, it might take some time to get there. So that's from the implied volatility perspective. Here we're seeing what the calendar spreads look like. So calendar spreads, remember, they're hedging off the move and looking, and it's more of like a implied volatility play. So here's what the calendar spreads did. Selling near, buying far. That was a winner 58% of the time for an average return of 12%. Diagonal spreads, you're doing options on different expirations and different strikes. So this is buying at the money near, selling out of the money far. That was a winner 58% of the time for an average gain of 5%. And in the puts, it was on average, it was a winner 73% of the time for an average gain of 7%. So that's just a real quick overview of an earnings in Nvidia.
Yeah, we did have a question from a newer chameleon, and he was asking, can you please show the most important indicators that you look at before making a trade? And I'm trying to, in the chat, explain that it's not any one indicator, right? It's layers and layers of layers and research and, based on past history, what you've done in the past, what's worked for you. Everyone's got a different strategy in the options space, and there are
different strategies. It depends your outlook, and there is no magic indicator. There's no one indicator that tells you. It's a combination of you're looking at multiple things and trying to determine what you think is most likely going to happen, right? So there is no one indicator. You have to kind of take as much information as you can and really form a solid basis for your most likely out, right? You need to go look at the news. You'd have to go look at other things that might impact the stock price, but there is no such thing as one indicator.
Yeah, Jake is saying it's multiple indicators and dependent on preference, risk, appetite, strategies, et cetera, et cetera. So
yeah, exactly.
With that, it's 9:29. Dima, great job. Listen, BK, thanks for asking to throw out the likes. Likes are always appreciated from people who join the show. It's a big deal with YouTube, our YouTube channel. Make sure you subscribe to the YouTube channel. Great job, Dima.
All right. Thanks, everybody. Thanks for joining us. Hopefully, we'll see you tomorrow on a pre-market show. Have a great trading day. Stay safe.
Awesome.
See you
And
guys
listen,
tomorrow.
chameleons, remember my background. Please let me know what city in the world you think that background is. And there is a chameleon who lives there. You get both questions right, I will send you a chameleon cup. Thanks, Dima.
Thanks, everyone.
Have a safe trading day, everybody.